After the breakout, the stock hit the 20% upper circuit back to back, and then it pulled back to its 10-day moving average and started moving up again. Welcome back, traders. Today, we are going to learn about one of the most powerful yet underrated trading strategies out there, the master candle breakout trading strategy. You are in the right place if you have been searching for a strategy to identify high probability trading setups. In this video, you will learn how and where to take entries and manage the risk by keeping a logical asset. Join us as we go deeper into the secrets behind the master candle and how it can transform your trading game. There is a bonus at the end of the video, so stay tuned until the last minute. Let's get started. So what exactly is a master candle? Simply put, it is a candlestick pattern that engulfs the next 4 candles, signifying a period of indecision. When the following 4 candles trade entirely within the range of the master candle without breaking its high or low, they are called child candles. But why is this setup important? Firstly, the formation of the master candle setup shows a period of consolidation. So when the price breaks out above the high or below the low of the master candle, there is a high probability that the price may catch a strong momentum in that direction. Now let's walk through some real life examples of how to trade this setup effectively. In this example, you can see that the stock was surfing on 10 and 21 EMA. Then it bounced from its short-term moving averages and then traded sideways, forming a master candle setup, and this is the master candle here. There are 5 child candles inside the master candle, and the 6th candle gave us the breakout above the high of the master candle. The breakout came with a strong candle of 13%. The entry can be near the high of the master candle, which is 1080, and the stop loss can be placed near the low of the master candle, which is 989, which is around 8%. If someone wants to keep a tight stop loss, then 1020 can be chosen as the stop loss, which is the low of the last 4 candles, and that is around 5% stop loss. After the breakout, the stock went up by more than 20% in just 3 days, and thereafter it pulled back to its 10-day moving average and continued to trade sideways. The stock broke out of this small consolidation after a couple of weeks and returned more than 50% in a few weeks, totaling around 89% of the move in less than 2 months. In another example, we can see that the stock was taking support near 10-day moving average and 21-day moving average. After a small up move, the stock formed the master candle with the support of its 10-day moving average. The candle that was formed on 28th November, it's considered a master candle in this case. The high of the master candle is 155, and the stock broke out above the high of the master candle after 6 days and moved more than 10% on the breakout day. Entry can be above 155, and if you want to keep a tighter SL, then the stop loss can be placed near the low of the breakout candle. After the breakout, the stock hit the 20% upper circuit back to back, and then it pulled back to its 10-day moving average and started moving up again. It delivered more than 150% in a month. Even if there are more than 4 child candles, I consider it as a master candle setup as long as the high and low of the master candle are still intact. You would have understood this by now. Next example. After the primary listing in the market, the stock was continuously falling. It made a new low and then bounced, traded sideways for more than a month, and then formed the master candle setup near the support level, which was 380. If you observe, the 5th candle invalidated the master candle setup by breaking the low of the master candle. But as the stock was trading near its support zone, the price bounced from 380 and again it closed back inside the range of the master candle, forming a hammer-like candlestick pattern near the support. Then the stock broke above the high of the master candle and also broke above the listing day high. In less than 2 weeks, the stock moved up by 65% before taking a momentary pause. This is how you can give some tolerances to the setup instead of following stringent bookish rules. Until now, we have been seeing some examples where the master candle setup worked pretty well. Let's have a look at this example. There were 5 child candles inside this master candle and 6th candle gave a breakout. There was a follow through day, but eventually the stock fell inside the master candle and it hit our stop loss before further going down. If we use the basics of technical analysis, we can see that the stock was falling, forming big red candles of more than 5%, and there was this gap down, and the range of the master candle, which was red, was almost 20%. The stock was sustaining below its short-term moving averages, that is 10-day and 21-day moving average. So we should avoid trading such setups where the fall is intense. We can see that here that the stock kept on going down. Now let's have a look at another IPO setup. The stock hit the 20% upper circuit on the listing day and then it traded inside the master candle for 5 days. It formed very narrow range candles for 4 consecutive days before breaking out. Here the range of the master candle is more than 12%, so it becomes difficult for us to set the stop loss near the low of the master candle. What we can do here is we can attempt an entry above the high of the last 3 narrow range candles by keeping the stop loss near the low of the same candles. And then our entry comes at 65 with the stop loss of 5%, which is at 61. After the breakout, the stock hit back-to-back 20% upper circuits and 10% upper circuits, delivering 79% in just a week. I hope you were able to learn what type of master candle setups have more probability of success and what type of master candle setups do not work much. The master candle setup can also be used in intraday trading as well as for swing and positional trading, offering opportunities for traders of all styles. And here is the bonus. Visit my profile on TradingView and follow me there to get access to this indicator, which finds this contraction for you and gives you a potential buy price. Also, the link to the Chartink Screener is in the description. Start scanning those stocks right away. If you found this video informative, don't forget to like and subscribe. Let me know in the comments if you want more such learning videos in the future. That's all for today. Stay ahead of the curve with real-time updates by joining our Telegram group, and don't forget to follow me on Twitter for more analysis. Until next time, happy trading.